What if I told you that Bitcoin hitting $300,000 this year isn't just hopium, but a very real possibility that's backed by billionaires, institutions, and some of the biggest brains in finance? Welcome to JRNY TV, where we break down the latest in crypto, digital assets, and market trends, no matter your experience level. Today's episode is all about the boldest predictions in Bitcoin flying around right now, and why they might not be so crazy after all. We're gonna go deep on the infamous stock-to-flow model, check what major analysts and macro legends like Michael Saylor, Cathie Wood, and Arthur Hayes are all forecasting, and we're gonna show you why this next phase might trigger one of the biggest FOMO bull markets in crypto history. Let's kick it off with where Bitcoin's currently sitting and why politics, ETFs, and macro chaos might actually be setting up the perfect storm. The stock-to-flow model, Bitcoin's built-in path to $300,000. Ever heard of Bitcoin's cheat code? That's the stock-to-flow model, commonly known as the S2F model, built by Plan B that suggests Bitcoin's scarcity is mathematically tied to price surges. The S2F model compares Bitcoin's total supply, known as the stock, to its annual production, known as the flow. And right now, post-2024 halving, Bitcoin's supply sits around 19.2 million, and roughly 328,500 new coins are mined yearly. That gives an S2F ratio of about 58, rivaling gold's 65 ratio. Plan B's latest projections put Bitcoin's fair value in mid-2025 at around 260,000 to 388,000 based on the 10-day and 463-day S2F models, which consider long-term scarcity and price alignment. Some of those advanced S2F variants, they even forecast an average near $500,000 this year, with possible peaks sliding into the $1 million mark. Yeah. Critics argue it's too simplistic, and sure, demand, regulation, and macro shocks, they also matter. But the model has a pretty solid track record. It nailed the 2024 post-halving bounce near $94,000, even if it overshot after the 2020 halving. Right now, Bitcoin is below the target band, which to believers means that the S2F surge is still underway. So yeah, mathematically speaking, the path to $300,000 and maybe even higher, it looks baked in, but that's just one lens. Up next, what are the real people, Wall Street legends, and crypto titans saying about when and how high Bitcoin might actually go? $300,000 price predictions. The experts are speaking out. All right, so we've covered the market setup and where we are in the halving cycle. But what are the big names actually predicting for this cycle? Because whether you're a seasoned investor or maybe you're just dipping your toes into crypto, knowing what the pros are thinking can help you get a lot more clarity. And spoiler, many of them believe that the $300,000 Bitcoin isn't some wild fantasy. It's actually within reach. Let's start with the most vocal bull of them all, Mr. Michael Saylor. This guy has basically made Bitcoin his brand. His company, MicroStrategy, now holds nearly 500,000 Bitcoin, and he's not slowing down anytime soon. That's over $35 billion worth of Bitcoin at today's prices, and Saylor's been crystal clear. He's not here for a short flip. He believes that Bitcoin is going to hit $1 million or more, calling it economic immortality and the apex asset of the century. His strategy is simple: accumulate aggressively and never sell. If anyone's betting on $300,000, it's the man who just bought more Bitcoin after it crossed $70,000. Now jump over to Cathie Wood, the CEO of ARK Invest. She's not just making bold calls, she's backing them with data. ARK's latest Big Ideas report shows a base case projection of 1.5 million Bitcoin by 2030. And that's not even their most optimistic number. She said repeatedly that institutional adoption is still in the infancy, and even a small reallocation of capital from traditional assets into Bitcoin, it could send the price skyrocketing. So if institutions start treating Bitcoin like digital gold, she thinks a $300,000 breakout could be a pit stop along the way to something much bigger. Then you've got Robert Kiyosaki, the author of Rich Dad, Poor Dad. He's not a tech guy, not a Wall Street insider. He is a macro guy, and he's terrified of what the Fed is doing to the dollar. He's been calling for Bitcoin to reach 300,000 or higher by 2025, especially as governments continue to print more money and inflation gets harder to ignore. According to him, Bitcoin isn't just a tech play, it is a lifeboat. And then there's Arthur Hayes, the co-founder of BitMEX, and one of the smartest traders in the game. His recent blog post laid it out plain. Bitcoin could reach $300,000 by the end of 2025. 6 months from now, driven by monetary easing, political chaos, and a surge in risk-on assets. Hayes believes strongly that once central banks do go back to printing money, and they will, Bitcoin will lead that charge. He's even called for the $1 million mark in Bitcoin by 2028. Say what you want about Hayes, but his macro takes have been eerily accurate before. Let's not forget too that others, they're starting to chime in. Analysts from Bernstein, Real Vision, and Fidelity Digital have all pointed to a range between 150,000 to 500,000 by the top of this cycle, depending on how aggressive institutions are getting and how fast retail piles in. Polymarket betting odds are still conservative, but momentum is still definitively leaning bullish. And as we've seen before, when the sentiment flips, it flips fast. So what does this all mean for you? The $300,000 mark isn't just some crazy number tossed around on X or Twitter anymore. It's part of a growing consensus that's shared by analysts, billionaires, and hedge funds alike that this bull run, it could be one of the biggest yet, especially if macro conditions stay shaky, interest rates fall, and ETF flows continue to rise. The pressure is building, the fuse is lit, and if history repeats itself, we could be in for a parabolic move that no one sees coming until it's already halfway down the fairway. And if these predictions hit even halfway, anyone stacking sats now might be sitting real pretty by the end of 2025. FOMO is building. This could be the biggest wave just yet. You've probably heard the phrase, you make the most money in crypto when you are not buying. Well, that's fear talking, but what if fear is actually fear of missing out? The truth is, as Bitcoin continues to climb higher, FOMO will inevitably creep right back in. And this time, it might be the biggest wave yet. Recently, Bitcoin's market cap hit a cool $2 trillion market cap again. Yeah, that milestone triggered a noticeable uptick in retail inflows, especially among small investors, the ones most likely to fall for FOMO. For example, on-chain data shows nearly 4% growth in wallet activity from accounts holding up to $10,000 as Bitcoin nudged six figures. Classic sign that macro investors are rushing back in. At the same time, institutional FOMO is also flashing green, bright green. ETF inflows are turning positive again, and major players like Blockchain Group, they purchased 624 Bitcoin, a cool $68 million in early June. And that's amid the short-term pullbacks. That kind of corporate accumulation only adds fuel to the retail frenzy. Social media is absolutely lighting up. Reddit threads are buzzing with new users asking, should I buy now? While TikTokers are promoting Bitcoin's success stories like lottery jackpots. The sentiment is becoming hard to escape or ignore. Echo chambers are creating confirmation bias for FOMO, making people feel like they will totally miss the boat. And guess what? This time, FOMO isn't just retail driven. Family offices, wealth managers, and even governments are all joining the party. A recent BNY Mellon report found that 39% of single family offices are now exploring or allocating to crypto due to competitive returns, averaging, ready for this, 152% annually since 2011. That's a solid return. All right, so real quick summary. We've got the $2 trillion market cap, big money entry, and social firestorms. Classic pre-parabolic phase conditions. If Bitcoin jumps further, we may be heading into a FOMO wave more massive than 2021's. Question is, will you be ready? Up next, wrapping this up together with what it means for your strategy and how you can ride this wave responsibly. All right, so you've heard the hype, the $300,000 price predictions, the stock to flow models, the big game bulls, and the building tsunami of FOMO. But now comes the part that most people overlook. How do you actually play this one without losing your mind or your money? Here's the reality. No one knows exactly when Bitcoin will break or how high it will go. But what's clear is that things are heating up and fast. Most people won't have time to react. And that's why you have to prepare before the madness starts. That means building your entry and your exit strategy right now, not later. You figure out your DCA game plan, your dollar cost averaging plan. You set your profit taking levels, and you make sure you're not chasing those candles when everyone else is already up 5x. The investors who win in these big cycles, they aren't the ones who are buying in the middle of the hype. They are the ones who stayed calm during the sideways markets, stacked patiently, and then planned ahead. The truth is, Bitcoin's future looks more bullish than ever, but it's the disciplined investors who will really benefit when it hits escape velocity. If you happen to be looking for any help figuring it all out, we're here for it. And that is what we built Trade Hero for. It's where we cut through the noise, map out crypto strategies in real time, and then we ride the wave as a team. Whether you're just getting started or you've been in the trenches, we have got your back. So what do you think? Is Bitcoin heading to $300,000 this cycle? Or will we fall face first and short again? Drop a comment below, smash that like button, and do hit subscribe so you never miss that beat. The bull run doesn't wait, and neither should you. This is JRNY TV, where we stay ahead of the herd, stack smart, and we build your success for long term. We will catch you in the next one.